Hello, this is California in Focus, and I'm Madeline Shannon. Today, I have Kenneth Strupp with me to talk about his recent story about how CalPERS invested more than $140 million in a Bitcoin-related stock. Hello, Kenneth.
Hey, Madeline. That's right. California's main public pension fund, CalPERS, has more than doubled its shares in MicroStrategy, now called Strategy Inc. It's a Bitcoin-related stock, and it's doubled its shares in the last 2 years, but just in the last few months, the stock has plunged by nearly half. So there's this SEC filing that CalPERS has to put out every 3 months, shows you what its holdings are and how many shares and the value. And as of its latest filing on September 30th, CalPERS held nearly $144 million worth of Strategy Inc. And those shares have since fallen from over $320 per share as of the filing to $171.42 a share recently. So there's been a huge decline in this stock, and that seems to be a major problem for the Bitcoin and broader holders of this Strategy Inc. stock, which has come under increasing scrutiny in the last month or so.
And Kenneth, can you tell me why CalPERS decided to invest so many millions in this Bitcoin-related stock?
A lot of public pension funds like to have diverse investments. They generally try to make a lot of investments in public equities. That's a publicly traded stock. And again, like other public pensions, they do diversify their portfolios. There is a bit of a question as to why they've increased their holdings in this specific stock so much in the last 2 years. I didn't really receive an answer on this investment strategy relating to the stock. Perhaps that's something they didn't want to disclose. And just as some background here, Bitcoin, it's highly volatile, but this stock itself is even more volatile than Bitcoin because this company borrows money and leverages itself to be able to buy more Bitcoin than it has the basic ability to finance, right? So because they're leveraged, the highs are higher, but the lows are also lower. And because of the recent small slump in Bitcoin, there's been a huge decline in this stock. There are questions about whether they'd have enough money to pay back the debt that they've taken on to buy the Bitcoin. There are also some stocks that do pay out some dividends. These are preferred stocks. And so Strategy has been able to issue some more stock and create a bit of a reserve buffer. But they've had this whole strategy of they want to be able to buy and hold Bitcoin and just keep buying. But they've become the largest buyer of Bitcoin. They're the largest holder behind the anonymous creator of Bitcoin and the Bitcoin platforms that people entrust the holdings of their Bitcoin to, so places like Coinbase. So if they were to start selling their Bitcoin, which their CEO said was a possibility about a week ago, then we don't know what would happen with that market. All that is to say, it's a very highly leveraged, very speculative asset that CalPERS has chosen to have its Bitcoin exposure through. And it just seems to, again, in combination with some of our other reporting, show that sometimes these investments of taxpayer money, well, ultimately taxpayer-backed, but this is, retiree money, may not have been the best investments. We did cover just about a month ago how CalPERS had invested hundreds of millions of dollars into this clean energy and technology fund that it created, and it lost over 70% of the money. There have been some great performance from CalPERS in other areas, so I'm not going to say that they've not done their jobs. But again, this is just cause for concern, because if these investments don't go well, it's the taxpayer that ultimately pays the price. And remember, CalPERS has 550 billion plus in assets, but it still has an unfunded liability gap. It still is only able to cover, I think it was 82% of what it owes in the future. And that the rest of that gap is going to be paid for who knows how. Ultimately, would be paid for by taxpayers if there's no other solution here. So again, this matters in the context of retirees. They're expecting to be able to retire. They're expecting to get what they're owed. and taxpayers might be the ones get stuck with the bill if investments don't work out as planned.
And I understand that CalPERS has invested much of its money before, like you've reported, in questionable assets. Is this just one more move that is part of a questionable investment strategy?
There are things that CalPERS has been deciding to invest more money in that could put it at risk. We have, again, that pension deficit that we've talked about. If they want to be able to make ends meet, they have to get higher returns, and that means investing in riskier assets. If you don't have a large pension deficit, you can go for much more stable, safer assets. And right, we talked about how just even a few weeks ago, we found that there was a large amount of capital committed to Hongshan, a Chinese venture capital firm that has portfolio companies that include blacklisted companies companies blacklisted by the US federal government for human rights violations and other possible abuses, close connections to the Chinese Communist Party. And it's going to be difficult to see if those investments can continue to do well in China, where IPOs have slowed down, where there are a lot of structural problems with the economy. Of course, you want to have exposure to the Chinese market if you're trying to have a global strategy, but it's unclear why that has to probably be through venture capital or private equity, something that's hard to sell, hard to get out of. You don't know what the value is. And that is sort of the big trend that we've been seeing. We've been seeing more of this money put into private debt and private equity. Private equity, you can't sell it on the open market. It's harder to find a buyer. You don't really know what your price is until you've sold it. Whereas in the public market, public equity, like even this stock we're talking about, you get the price in real time. You can usually sell it pretty quickly if you have to. If these pension funds that have invested a lot into private debt, private equity, ever need a lot of cash quickly, it would be harder for them to actually pull that money out.
And what has CalPERS said in its defense of its investment strategy into this Bitcoin-related stock?
Well, they said it's just one stock among the thousands it invests in, and to a large extent that is absolutely true. But obviously, they've doubled the number of shares they hold in the past 2 years, so they clearly have some kind of strategy, right? It's not, and again, their other equities more broadly have performed well in the last year, and we'll see how their public equity strategy performs as we move forward.
Well, thank you so much for talking about this story with us, Kenneth.
Thank you.
This has been California in Focus. I'm Madeline Shannon. Join us next time.